Solved problem on the preparation of cash budget. Problem. Thomco values, advertises, and sells residential property on behalf of its customers. The company has been in business for only a short time and is preparing a cash budget for the first 4 months. Expected sales of residential properties are as follows. Month December, January, February, March, April. Units sold 10, 10, 15, 25 and 30 respectively. The average price of each property is 180,000 and the Thome company charges a fee of 3% of the value of each property sold. The home company receives 1% in the month of sale and the remaining 2% in the month after sale. The company has 9 employees who are paid on a monthly basis. The average salary per employee is 35,000 per year. If more than 20 properties are sold in a given month, each employee is paid in that month a bonus of 140 for each additional property sold. Variable expenses are incurred at the rate of 0.5% of the value of each property sold, and these expenses are paid in the month of sale. Fixed overheads of 4,300 per month are paid in the month in which they arise. The home company pays interest every 3 months on a loan of 200,000 at a rate of 6% per year. The last interest payment in each year is paid in December. An outstanding tax liability of 95,800 is due to be paid in April. In the same month, Thome Company intends to dispose of surplus vehicles with a net book value of 15,000 for 20,000. The cash balance at the start of January is expected to be a deficit of 40,000. Required. Prepare a monthly cash budget for the period from January to April. Your budget must clearly indicate each item of income and expenditure and the opening and closing monthly cash balances. Workings. Year. Month. December, January, February, March, April and May. Units sold 10 in December, 10 in January, 15 in February, 25 in March and 30 in April. Average price 180,000 per unit. Total sale price 1,800,000 in December, 1,800,000 in January, 2,700,000 in February, 4,500,000 in March, 5,400,000 in April. Commission at 3%. In December, it comes to 54,000. In January, it is 54,000. In February, it is 81,000. In March, it is 135,000. In April, it is 162,000. Initial charge 1% is collected in the same month. So it comes to 18,000 in December, 18,000 in January, 27,000 in February, 45,000 in March, 54,000 in April. Balance commission next month at 2% is collected. So the 2% in January it is 36,000, in February it is 36,000, in March it is 54,000, in April it is 90,000, in May it is 108,000. Number of employees 9. Average salary 35,000 per year per employee. Total for the year 315,000. 9 into 35,000. Salary for each month 315,000 by 12. 26,250 each month. If more than 20 properties sold, there is a bonus. So more than 20 properties sold are 5 in the month of March, 10 in the month of April. Bonus is 140. Number of employees 9. Total bonus number of plots more than 10 into 140 into 9 employees. It comes to 6,300 in March, 12,600 in the month of April. Variable expenses on the sale price is 0.5%. It comes to 9,000 in December, 9,000 in January, 13,500 in February, 22,500 in March, 27,000 in April. Interest on loan, principal, rate of interest, interest per annum, interest per quarter. Principal amount is 200,000, rate of interest is 6%, interest per annum is 12,000, interest per quarter is 3,000. Cash budget. Let us put the workings in the cash budget for the month of January, February, March and April. Beginning balance 40,000 minus, it is a deficit in January. Commission 18,000. Commission 2%, 36,000. Sale of vehicles nil. Total 14,000 is the receipts, net of receipts. Payments, salaries 26,250. Variable expenses 9,000. Fixed expenses 4,300. Total payments 39,550. Still, there is a cash deficit of 25,550. In February, beginning balance deficit 25,550, commission 27,000, commission 236,000. Total net of cash balance is 37,450. Payments, salaries 26,250, variable expenses 13,500, fixed expenses 4,300. Total payments 44,050. Still, there is a deficit of 6,600 at the end of the February. So in the March, beginning balance deficit 6,600, commission 45,000, commission 254,000. Total net cash balance is 92,400 after deficit. Payments, salaries 26,250, bonus 6,300, variable expenses 22,500, fixed expenses 4,300, interest on loan 3,000. Total payments 62,350. There is a cash balance of 30,050 by the end of March. So April beginning balance 30,050, commission 54,000, commission to 90,000, sale of vehicles 20,000, total cash 194,050, payments, salaries 26,250, bonus 12,600, variable expenses 27,000, fixed expenses 4,300, tax liability 95,800, total payments 165,950, closing cash balance is 28,100 by the end of April. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.